Hello, everyone. Once again, I'm Hal Levy at PYMNTS.com, and I am joined again by Miriam Sheril, who is Head of Product at US at Form 3. We're happy to have you for a continuing conversation. Welcome back.
Right. It's great to be here. Nice to talk to you again, Hal.
We're discussing certainly something timely. That's FedNow and what we're seeing just a few weeks after it's gone live. And of course, your own firm has certification under its belt. So let's get started with talking a bit about all manner of things FedNow. We've got let's call it 2 weeks as of this conversation. So what do you think you're seeing when we talk about early use cases in the earliest days with the early adopters that you are on the ground seeing? What's most promising as FedNow really start to get out of the gate?
Yeah, it's been really interesting since they announced their go live. And there's been real live transactions going through the system, right? So I think in the last call we talked about my background. I was part of the team that built FedNow. So I feel very, very happy for that team, and then also really happy for my team because now we did certify, as you mentioned, as a FedNow service provider. What's interesting is you have a few banks that have gone live. You have service providers that have certified that they can provide these services to banks for FedNow. I think everybody was in a little bit of a waiting game, right? To see if they would really go live. There was definitely this, I'm interested in FedNow. Let's see, let's see. And then they went live in July as promised, which I think is huge. What we're seeing is a renewed interest. So we're getting an influx suddenly from customers who were talking about it, but I think talking about it in more of a, yeah, we know we have to, we'll see, when should we do it? And now FedNow went live, and there are those who are announcing their first transactions through the system, and they're going, okay, actually, Form 3, could we talk seriously? Because we need to get on FedNow. We talked about that chicken and egg, right? I think in our last discussion. So now we're going to start to see some traction on that. The service is live. There are banks live on it. There are going to be more banks joining it. As that network grows, it's going to become more and more important for more banks to get on it, or they're going to get left behind. We're going to start seeing that go over right now. But I did see some announcements of real traffic. So it's not just a cold go live, hello world, it's in production. There are true payments moving over the rail, within 2 weeks of it's going live. So that's really cool.
And you mentioned obviously getting on board, for the banks to get on board, for the critical mass that we've discussed in the past to be there. Obviously, connectivity starts to be important. Let's talk a little bit about your own vantage point, having been certified as a firm to help banks and others scale into this. I'd like to get a sense from you. What are the hesitations that have been there, at least from a technology and connectivity perspective, which then, of course, lead to the way you are able to
Yeah.
validate fears? So talk about that if you could.
Yeah, banks are definitely worried, right? This is instant payments. This is 24/7. Yes, there are some rules that allow you not to be 24/7, but that comes with pain points because if you're the bank that signs off, all the other banks get this notification and they can't send payments to you. And how many customers are going to want to be on a bank that's going to do that to them, right? If you're a business that's saying, "Hey, I'll take your payments anytime, you could pay your bills anytime," and then you've onboarded with a bank that basically signs off every weekend, you're not going to stick with that bank. So while there's allowances, the banks know if they don't do this well and they don't do it in the way that it needs to be built, they're going to have a problem. And the lessons learned from RTP are part of this. RTP has been around for 6, 7 years now. So there's banks who have done it, who have already seen, hey, you might think it's going to start slow, but it's going to really grow very rapidly. They've kind of made that announcement. The volumes are increasing. And the banks who implemented a solution that was like a copy of ACH or Wire have now realized, shoot, I got to go back and upgrade that solution. It's not going to work for this new world that's going to grow. So with FedNow, a lot of banks are kind of hesitating on the, yeah, I want to get on it, but it's a really big lift to get something that's, 4 nines resilient and that's always running. And all of a sudden I have to remove my batch processing, world, and I can't have end of day processing. And then to your point, yeah, that's kind of what Form 3 is doing and what we've done already in other markets. So this proven platform that runs 24/7, that's hosted in 3 clouds already. So from a resiliency angle, basically the most resilient option you can have, and runs in the world of instant payments in Europe and in UK already. So while yes, in the US we have to build out kind of the specific nuances, right? A connection to the Fed and a connection to RTP and those specific ISO messages, we're not building the platform from scratch. It's already running and it's been running for 6 years. And FPS in the UK is a great example. They really do not allow outages. I mean, it is very newsworthy when someone goes down. And so nobody wants to go down. And that's where we have, 45 to 50% of the market, because the technology is what banks want. Like the business case is process a payment. Many providers process payments. I can't say we're the only ones who do that. But the technology, the technical use case of process a payment with zero RTO, no downtime, support thousands of transactions per second, do it in a way that I can be rest assured that if a whole cloud provider is having an issue, I'm still up and running. I don't think anybody else does that. I mean, I'm a little biased, but I've done my analysis. I don't think anyone else does that. And that is what banks need to implement it. And then the flip side is, even if you have a solution like that, you better make it easy for banks to use it.
That leads me to ask you, because we're talking about fear of outages, which is certainly understandable. But beyond that, to your point, you almost have to have all the gears running, even if there is an issue somewhere else in the mix. And then also you need to make sure that you are um, able to triage as you go, right? You can't just say, oh, I'll just interrupt it over here for a minute. Everything cascades and fails, and then there's a problem. This leads to a mindset shift for banks too, right? Because usually, at least in the past, they've been a bit covetous about these are our processes, these are our technologies, this is what we do. And yet, to do it effectively now, to connect to your point, in a streamlined way, they have to partner, right? They should partner. So let's talk a little bit about that. You have the vantage point from having been on both sides of the equation. Take me through that. Take me through what FedNow might have been envisioned to be when you were coming into it as a project. And beyond that, how have the mindset shift that banks have had to tackle started to open up the conversation as to what this all really could be?
Most banks at up till a certain point were really thinking about, well, I have existing rails, I have ACH, I have FedWire. What's FedNow? Is it ACH? Is it Wire? Like, which one is it? Is a combination of the two? I'll take this piece, I'll combine it with this piece, it'll be fine. And then as they got closer and they really started trying to implement it and thinking about it, they're like, no, no, no. Maybe there's things I can leverage, but at the end of the day, this is a brand new type of payment. It's not really an ACH payment. It's a retail payment, but it's not an ACH payment. It's not really FedWire. It's a real-time gross settlement, but it's not a wholesale payment. And so it's really something unique. It's a Frankenstein baby, a Fed ACH and FedWire. It's my favorite line. I'm just going to keep saying it. And so banks have started shifting. And what you said before is interesting. Do they have to partner? I don't know. I think there are still some banks out there who are like, nope, I will build everything myself. But what they're seeing is that others are getting ahead of them, because there's a certain aspect to this that is not unique to a bank. A Fedline connection to get to FedNow is the same for everyone. There's different variations of it, but there's nothing unique to a specific bank. MQ messaging and MQ infrastructure is not unique to a specific bank. The ISO format that FedNow puts out and RTP puts out is the same for every single bank. So those things, why wouldn't you partner? Why wouldn't you leverage someone who's already built it, because they have to build it for 100 other banks, and just take that opportunity, go focus on building out products for your customers, for your consumers, for your businesses, to actually get more payments going over these rails. That would be the ideal thing for a bank to go focus on if they had time and weren't busy spending money and spending build on the connection and the rail and the gateway. And that's where we're seeing way more banks in different tiers than I was expecting when I joined Form 3, really open to the conversation of, yeah, I'd love for someone else to go deal with all of that operational MQ infrastructure, technical stuff that frankly I can't do very well because I haven't invested in technology, and I don't need it to be unique. Like, I don't need you to do something different because I'm Bank Miriam or Bank Hal. It's the same. I'll go deal with the things that are specific to Bank Miriam. And that's been a great conversation. There's a lot of appetite for that.
There seems to, depending on where you read, a lot of conventional wisdom is that FedNow, and you're just disproving it, is a, fully formed, sprung from the head of Zeus, a new thing. It isn't necessarily. And as you mentioned a moment ago, it's a bit of a Frankenstein approach, which is fine. But there is some past as prologue. And Form 3 has that history, because we know in the UK and in Europe, there's been a fair amount of experience with faster payments, and certainly with a little bit more of a uh, signing on to really embracing that. So tell me a bit, if you could, what the lessons that we in the US could take from what's happened across the pond, and maybe even some this is the, be careful of XYZ. Don't tread lightly in that area. Be quite careful. So what would you say we've learned from past experience that might be informative to what we're going through now?
We definitely saw this, especially in the UK, right? There's this kind of push to like, maybe I'll build it myself, and just be really mindful of doing that again in this space. It's brand new. There aren't tons of payments yet. When FPS started off, some banks built themselves and then realized that was such a waste. Like, why would I go build this stuff again myself and have to maintain it myself just for my bank and my business, when I can then, use someone like Form3? And so we've had customers kind of build themselves and then move to us, right? Which is a migration, which actually can make things a little trickier. It's not so easy to move. It's doable. We've done it. But those who started from scratch with us had a much easier time. So really think through your strategy is what I would say. Learn from the UK, learn from Europe and SEPA Instant of what banks had to go through and where they landed. And in the US, a lot of people say we're behind. Maybe we are, but maybe because of that, we can start at where they're at, right? So we don't have to go back to the beginning. So just, use someone who's already built this, and then don't start it from scratch. So that's the stuff we already talked about. There's obviously the big fraud topic. So we are seeing that in UK and Europe. Unfortunately, push payment fraud increases in these systems because you basically taking a push payment that's irrevocable, but you have rules around instant availability of funds, right? So I've heard a lot of people talk about, well, is it really new? It's just kind of the same fraud that exists on wire. Not really, because on wire, there's so much that can be done and there's more time to do it to try to prevent things. And you don't really have that here because of all the rules about funds availability. And then some people compare it to like fraud that exists in ACH. Well, also not really, because again, there's more time. The settlement isn't irrevocable. So there's actually more legal avenues you can take. That is kind of the new piece here. This is irrevocable. It is a credit push and funds are out the door really, really fast. And so it is just a prime opportunity for fraud. So really start with your fraud solutions. Think about that upfront, even if you're starting only with receiving payments. Like a lot of banks are taking that mindset. Let me go slowly. Let me start receiving instant payments before I start sending them. But even on the receiving side, think about that. If you receive a payment, you have to give it away to your end user in near real time. What are you going to do in those 5 seconds that you have? How are you going to do that in a way to help you prevent fraud? And again, that's where you got to think about partners. Like, don't try to build your own thing. It's a very tight performance time. If you don't have great technology, you're not doing a good fraud check in that time. So leverage a partner.
I like your point about the fact that a back office needs to stretch out its operations even when the business is closed, and that is a huge shift, right? That's important. Is So if we think about this, and you had mentioned a moment ago, the scaling approach, some banks will say, well, I'll only receive, and we'll see how that goes. We'll do the sending piece later. So if we are progressing through that, um, almost like a stair step progression, right? We'll do this, we'll do that, we'll get there. Take me through what you think might be the natural progression. If we have this conversation a year from now, right? With everything you've seen over the past few years, with the global view that you've had, where do you think FedNow goes a year or two now? Do the banks change their mindsets well enough to have a 24-hour, 24/7 mentality? And if they do, what use cases might we see blossom that we really couldn't have necessarily been hitting today in August of 2023?
It's interesting. I think it's going to be the opposite of what you just said. I think it's the businesses that will drive the bank. So everybody asks about use cases, right? And there's the few that we know they're going to move to instant payments, A to A being the biggest one, right? Like you want to move money from your bank account at bank X to bank Y. And I have 2 bank accounts now at 2 different banks, because one has my student loan. And it drives me nuts. Like, I just want to move a few dollars over because I need it in that account to pay a bill. And it's like, it'll be there on Monday. Like, well, it's my money. Just move it. So I think that'll be the first, the me-to-me payments. That's an easy use case. FedNow allows for all types of accounts as well. So it could be to your brokerage account, right? Like those are easy use cases I think will flow. There's payroll, specifically when businesses want to change payroll, like, hey, work for us, we'll pay you daily, right? That can be an instant payment use case. And real estate's a big one. So real estate, now that the limits are getting a little higher, not quite enough for some of the big real estate deals. But what I've seen and heard, and frankly, my husband's the general counsel at a real estate company. So what he's said when I talk about FedNow is like, great, because we hate the wire shut-offs and we hate that there's nothing we can do on the weekends. Doesn't say a lot for like, work-life balance of where we're going, but that's what these companies want. So I think the businesses are going to innovate and drive big use cases. So I always think that what's going to happen in maybe 2 years, I don't know about 1 year, 1 to 2 years, we're going to look back and be like, yeah, A to A moved, yeah, payroll. And look at those three use cases that we never even thought of. And they're going to be like the biggest use cases because it's going to be the innovation of, oh, wait, it's a 24/7 world of money movement. Now businesses are going to start shifting and thinking about, well, what can we do differently? They'll give us an edge. That'll drive payment use cases, and those use cases will move over those rails. So I think we're going to see it the other way. Like, the payroll one is probably the easiest one for me to think about. So nobody would have ever thought about paying daily, ever, right? Or instantly, because you just couldn't move money that way. And now all of a sudden you have businesses. I already saw a sign at Walmart that was like, hey, we'll pay you right away if you work here. So now businesses are going to use this opportunity to create these new use cases, drive their own customers and get, more momentum on their side. And that'll drive use cases over these rails. The thing for the banks to think about is, as that happens, those businesses are going to go to the banks that can support them 24/7. They're not moving to the banks that say, sure, I can do FedNow, but they haven't actually opened it up and there's no way to actually do it, right? Like you don't see it on your mobile app. They're going to move to the banks who can fully support it. So you could start on receive, but you got to get to send and you got to get to 24/7 support and your real-time funds availability. I mean, you have to do it right at the end of the day. You can get there slowly, but you better get there. Or honestly, businesses, consumers, corporates, they'll move to the banks that can do it.
Yeah, I know that's a great point. That the competitive edge really is a competitive edge. Caution may wind up being a problem down the line. I think that's a good point. And thank you as always for the time and for the conversation.